morning, everyone. Welcome to our discussion today. As Patrick mentioned, I'm John Caucis. I'm the director of our Federal IT Research Program here at TBR, and we're going to spend our time today talking about what we're observing in the federal IT market, the overall state of the market, as we call it, what the drivers are behind the market growth, what we're seeing. We'll do a quick drill down into the civilian and defense and intelligence sectors, what we've observed there through the lens of the vendors that we track. And then we'll talk about how the vendors that we track are performing and positioning themselves for the upcoming federal fiscal year. As some of you may or may not know, federal fiscal year runs until September 30th, so we're about 2 weeks away from the close of fiscal 24. We have data through the first 3 quarters of the federal fiscal year 2024, and we not only have insights on how things are shaping up, but where the market is headed for the next federal fiscal year. So with that, this is us who are going to be presenting the data today and fielding your questions, and we'll start with the drivers behind the overall federal IT market growth. I want to provide a little background just to give you the backdrop as to what the Federal IT Research Program at TBR encompasses. We're currently tracking a revenue base in federal IT spending of roughly $17 billion on a quarterly basis, which aggregates up to about $68-69 billion per annum. To illustrate the continued growth of the market, a year prior, the total federal revenue base tracked by us was about $16 billion, and that base has expanded roughly 6 to 7% every quarter on a year-to-year basis over the prior year. Now, a couple of comments about the prior year, and you can see, and let me orient everyone to the graphic on the slide here. 3 measures of growth, all at a weighted average basis, and this is the average growth for the 11 companies in our federal IT services benchmark. On a statutory, a straight line basis, the darkest shaded green line, we also plot organic growth. When M&A was more of a factor, there was more of a delta between organic and statutory. And then as another way of smoothing out the impact of M&A, when once again M&A was more of a factor in the market, we also plot the trailing 12-month growth here. So what does the graphic mean? Well, a year ago, federal fiscal 2023 was the strongest year we've ever seen in the market. We've been following the federal IT space for roughly 15 years, and we've had good years and bad years, up years and down years. But 2023, owing mostly to the budget deal that was struck in June of last year, which really unleashed a torrent of funding, not isolated to it. It was consistent across the civilian and defense space. The intel markets have been intel market, I should say, has been a bit more sporadic, but defense spending in particular, a year ago, it surged towards the end of the federal fiscal year. Since then, we've observed a stabilization in the market, but a stabilization still around very, very robust growth rates. Some deceleration on the defense side. There's been a bit of a rebound in the most recent quarter. We're currently tabulating the data for the second calendar quarter of this year, which represents the third fiscal quarter of the federal fiscal year. And it right now, it appears as though, and we're fairly confident in saying that growth will accelerate from what we're projecting here on the graph. This is the graphic from our last benchmark, which covered the first calendar quarter of 2024. We're just a few weeks away from publishing the next benchmark. We have the full data set in, and so that's why I can say with a high degree of confidence that the market and market will accelerate, and growth will accelerate, and it's not unusual. It's a seasonal phenomenon that we observe every year as the market approaches. In the lead up to the end of the federal fiscal year, spending tends to accelerate, certainly in the third calendar quarter of the year, which is the final calendar of the quarter of the federal fiscal year. But this year we started to see an acceleration happening a bit early. And I believe that is another indication of just how strong, how robust the underlying market in federal IT remains. What are the underlying fundamentals? Well, it's digital transformation, very broadly speaking. That is certainly the case in the civilian space. Over in the defense market, there's a lot of modernization work going on, and there's a lot of modernization work that is still needing to be done over the next several years. We know, for example, that there are some agencies that are running their IT infrastructures on 30, 40-year-old programming languages, COBOL, and that technology is insufficient. You simply can't layer on digital technologies on that base. The modernization has to happen. It is happening. It's accelerating. If you wind the clock back to the pandemic in 2020, that was actually another accelerator of growth because it really pushed federal IT decision makers to recognize the insufficiency of their IT infrastructures, particularly around cloud computing, and we've seen an explosion in cloud spend. I think the projections that we have are the federal cloud spending across the board is going to total anywhere from $17 to $20 billion in federal fiscal 24, and continue to grow from there. We did just publish back in June our federal IT and cloud market landscape, and all of that data is in there. We can certainly provide the link to anyone who's interested if you'd like to review that research that we went forth with a couple months ago. Digital transformation technologies to enhance national security, and this isn't just in the defense, the Department of Defense, but also the intelligence community, as well as the law enforcement agencies in the civilian space. And then mission transformative generative AI is really starting to take hold. We're seeing the conversations were happening, the business cases were being made by vendors up until this year, but now we're starting to see more of the implementation happening. We're starting to see more awards being made, not so much that are exclusively AI, but are in greater to a greater degree being led by generative AI technologies. We're seeing vendors standing up new centers of excellence where they can showcase their AI and Gen AI capabilities. Accenture and Google, for example, just launched a new generative AI innovation center in the Washington, D.C. area. So Gen AI is where it's at. Cloud is where it's at. The overall market remains robust. We fully expect that even though there's some indications that overall IT spending growth will slow in federal fiscal 25, we fully expect that the final quarter of federal fiscal 24 will be a good one for the contractors in the market. So I'll stop there, see if there are any questions from the team or from the audience before we move forward.
John, just one thing I think is worth clarifying is talk a little bit more about what's in the Fed cloud market landscape, just so folks are aware of that particular piece of research. You mentioned it, but I think we should probably explain that a bit.
Yeah, that research. It's essentially the overlap between my practice area and what our counterparts in TBR's cloud practice are doing. And the overlap is exclusively in the federal IT market. We take the 11 companies that I track, that James and I track, companies like Leidos and General Dynamics IT and Booz Allen and CACI, Maximus. We pull together the developments and the activities on behalf of those vendors that are exclusively cloud related. And then we sit with our colleagues on the cloud side to see what, for example, the hyperscalers primarily are doing, but also the other vendors that they track there. I'm not sure the scope of their vendor coverage. I know it certainly includes the hyperscalers, including IBM and Oracle, and some other cloud technology providers. But we're looking at that, where the two markets overlap, where federal IT and cloud meet. What's happening there? What's happening with the vendors that I track and with the vendors that my colleagues in the cloud practice track?
Excellent, thanks. I don't see any other questions. Let's keep moving on.
Okay. So next up, what we're seeing by sector, the three major sectors in federal IT being the civilian, the defense, Department of Defense, and the intelligence community. And for the purposes of reporting, the vendors that we track, for the most part, with one exception, bundle in revenue from the intelligence community with their defense business. There's it's not always a clean cut approach, but I'm just kind of generalizing right now. So just to familiarize everyone with the graphic on screen, once again, weighted average growth, but this is the average for the 11 companies in our benchmark by segment, defense and civilian. And then some vendors like Maximus, they have operations in the U.S. State government markets or international markets. I'm not going to spend any time talking about that. That's really outside the scope of what we do. We only include it, if performance in one of those non-federal markets happens to be driving the needle for one of the vendors, we need to call that out. But our focus is exclusively, on the federal IT market. So what we've seen, and this extends back before, this really extends back all the way to the beginning of the Biden administration, where we have seen an explosion in investment in the health IT space. And health IT is very hard to define. It's in the commercial market, as well as in the federal space. It's very fragmented. But for the purposes of our benchmark, it is essentially it's not the very specific health IT technologies like MRI machines or surgical tools, things like that. It's the integration work behind that connects those advanced tools and technologies to the IT infrastructure and for the purposes of our benchmark and for the federal IT research program at TBR, to the IT infrastructures of agencies like HHS, Health and Human Services, CMS, et cetera. The Food and Drug Administration is in there, and the Veterans Affairs Administration is in there as well. So, but on the civil side, and to a lesser degree on the defense side, because VA is considered to be part of the DoD, we have seen an explosion in investment led by the Biden administration in the health IT area. I'll throw a couple of examples out there. Booz Allen Hamilton now is guiding that their civil business, which is roughly, I should say, health IT now comprises over 55% of their civil business, and that's a significant dollar value. That's between $1 and $2 billion a year, I believe. We can certainly take that as a follow-up to make sure that we're on point. But health IT has been an area of significant investment, significant growth for vendors like Booz Allen and Leidos, Maximus as well, and it is prompting vendors like Accenture to make acquisitions. They made over $1 billion acquisition of a company called Cognosante about in the April to May timeframe. They just completed the integration, and as a result of that, they stood up a dedicated health IT practice within Accenture Federal Services. So, every indication is that health IT is going to remain a primary area of investment. We fully expect to see additional acquisitions being made there. We know that Deloitte Federal, for example, acquired a much smaller company, but made an acquisition to enhance their own health IT capabilities. Outside of the health IT space, civil agencies are continuing to aggressively digitally transform their IT infrastructures. Security is a major focus. Securing both civilian and over on the DoD and the intelligence community, securing infrastructures against the ever-increasing volume and sophistication of cyber attacks by bad actors on behalf of nation states and on behalf of individuals. Over on the civilian side, digitally enabling citizen services is another very large area of investment. You'll see vendors like Accenture and CGI and Deloitte and Booz Allen Hamilton. They have cashed in on that demand over the last several years. So over on the DoD side, the investment has focused on digital transformation as well. They're a bit ahead of the game in terms of digital transformation and specifically the implementation, the adoption of generative AI, because of the clear benefits and the clear advantages that AI will bring to our warfighters, to Pentagon operations globally. 5G is another area of investment, and securing DoD infrastructures and intelligence community systems is even more critical, mission critical in these two sectors, even more so than in the civilian side. Defense and intel and national security agencies in the civil market also continue to turn to the vendor set that we track, for advanced solutions in big data. I had mentioned cloud earlier. That's another big area of investment, as well as AI, as well as analytics. And then increasingly, we're starting to see more discussion, more interest around areas like quantum computing, for example. What we observed specifically over the last couple of quarters is that defense growth, after really exploding towards the end of the federal fiscal 23, it dialed down a bit thus far, but is about to reaccelerate in the second calendar quarter of this year based on the data that we've collected. Civil growth will be strong and accelerating as well. So again, it just underscores how robust the market continues to be across the board. So if there are any comments or questions from the team or from the audience, I'll pause. Otherwise, we will continue to move forward. Okay.
I think we're good to go, John. Yeah, let's keep going.
Okay, so this is one of our clients, one of their favorite graphics, because the story that it tells, excuse me, is essentially who's growing the fastest, who's doing it the most profitably, and what the relative sizes of each of the 11 companies, and they're all plotted here, what the relative sizes of each company's federal IT and IT services revenue base is. Just to walk through the leaderboard, perhaps James, this is where you can give us some quick details as to what enabled Maximus to be the #1 growth leader, and I can take us through the remainder of the vendors at the top of the market here.
Sure. Thanks, John, and good morning, everyone. So Maximus was easily our growth leader here. The U.S. Federal Services segment revenue expanded over 20% year to year to surpass $700 million in quarterly revenue for the first time ever. This was all organic and continues to be driven primarily by volume growth around its expanded programs like the VES businesses, Veterans Affairs, medical disability exams contracts. The overall operating margin, it was 9.5%, up 140 basis points sequentially and 430 basis points year to year. The dramatic year-to-year improvement was largely driven by Maximus divesting a variety of unprofitable businesses within its outside the U.S. segment, but the economies of scale generated by the higher volumes of medical disability exams and claims processing work with the VA have also been playing a prominent role. We should see its operating margin remain elevated through the rest of the year as these economies of scale persist. John, would you like to take on Accenture next?
Sure. Accenture Federal Services has been, with the exception of this quarter, has been really a perennial growth leader in our benchmark study. And they will return to the #1 ranking position in the second calendar quarter of this year, owing primarily to the acquisition I mentioned a few minutes ago, their purchase of Cognosante, which should add roughly $400 million to their top line, driving their growth somewhere between 25 and 30%, I'm guessing at this point. Maximus will still be on the leaderboard, I believe, as well, although they will probably shift a bit to the left. For Accenture, all of the aforementioned growth areas, and now you can add health IT to that as we move forward. Health IT has been a driver for two of the remaining 3 vendors on the leaderboard. Booz Allen Hamilton, as I mentioned earlier, Booz Allen is doing a lot of work to advance and modernize health IT infrastructures in the federal space. Leidos' health business, if you may or may not be aware that Leidos and Accenture and Oracle, certainly after their purchase of Cerner a couple of years ago, those 3 vendors collaborated on the military health systems Genesis EHR modernization program. That is now wrapping up. I think that was one of the motivations behind Accenture Federal Services purchasing Cognosante. The recompete for that is coming up. Whatever MHS Genesis 2.0 is going to be, Leidos and Accenture are getting ready for that. Leidos' health business was up over 20% in this quarter. It will be again in the second quarter of the year. They have reached 100% deployment of MHS Genesis as of the as of the second quarter of this year. Booz Allen and CACI share a commonality in the defense market. It was for both companies, I believe their defense growth was in and around 20% year to year for this quarter, and will be again in the second calendar quarter of this year. The defense and intelligence sectors for CACI, that's really their bread and butter. They quite literally yesterday made a $1.4 billion acquisition of a company that fits perfectly within their wheelhouse in the defense and primarily in the defense sector in terms of signals intelligence technologies, electronic warfare, the acronym ISR, short for intelligence, surveillance, and reconnaissance technologies. So CACI is doubling down. They made an acquisition a short time ago as well, a much smaller one, of a company that's providing them essentially this similar technologies in the intelligence space. So they're doubling down on the DoD and intelligence markets, even though there's indications. There was a Bloomberg report yesterday that suggested that DoD growth might slow quite a bit as we move into federal fiscal 25. But you're seeing Booz Allen is also doubling down in the DoD, opening up innovation centers to showcase its advanced technologies. They're doing, for example, they're doing research around directed energy, and as well as 5G, as well as AI and Gen AI. Leidos has really a world-class R&D organization that sets them up quite strategically in the defense market. They have a lot of large legacy defense programs. The $11 billion Defense Enclave Services program, the $7 to $8 billion Navy Next Generation modernization program that they won a few years ago. There's other multi-billion-dollar awards that Leidos has in the defense sector. So it's their growth wasn't quite as strong, but it's a larger revenue base over at Leidos. But it was still robust. It was still in the mid to upper single digit range for Leidos. So really, those are the common areas across the leaderboard. The remainder of the vendors in our benchmark, CGI has had quite a bit of success with their asset and financial management platforms. IBM Consulting, the smallest vendor in our benchmark, they did just almost double the size of their revenue base with their purchase of Octo Consulting a few years ago. They're starting to get traction with that. Hybrid cloud, secure hybrid cloud is really going to be the tip of the spear for them. James is our lead on General Dynamics and KBR and ICF. I'll let him make a few comments about their performance. I do want to address the issue with SAIC being in the laggard quadrant. This will change in the second calendar quarter of this year. They're restructuring their operations. They are gaining traction with their cloud capabilities. That is really going to be the centerpiece of SAIC's growth strategy, cloud and AI going forward. They've had to get their ducks in a row organizationally and operationally over the last year. There's been a handful of divestitures and business disposals that they had engaged in, which impeded their growth, but they're bouncing back. And the market is still strong enough to enable them to pull much closer, I expect, to the remaining competitors in the benchmark, in our benchmark over the next year or two. So, James, let me hand it back to you to take us through the remainder of your companies.
All right, thank you, John. I think we'll skip to General Dynamics. I think most of our clients normally find them the most interesting. So we track General Dynamics Technologies holistically, which is to say we followed the GDIT unit as well as the Mission Systems Group. The Mission Systems Group, it continued to struggle in 1Q24, and I would say that's largely the chief reason for why GDT is where it is on the bubble graph on display right now. There's still demand for its Navy platform support business and cyber offerings, but it's just no longer facing favorable year-to-year comparisons to when it had supply chain disruptions, and its legacy programs are winding down while newer initiatives are ramping up, which is going to cause mission systems revenue to contract for the year. GDIT, however, the consulting practice is influencing deals, and there's growing demand for its digital accelerators. The concern is with GDIT, the unit's backlog noticeably increased and it's facing award delays. It's just worrying to see this trend crop up again. But I would still say there are more positives for GDIT than negatives heading into 2024. We saw more than $2 billion in awards during 2023 being tied to its digital accelerator portfolio, which is now going to include digital engineering, as the consulting practice identified that clients need assistance with using digital engineering environments to create these programs. And to a broader extent, I think this shows why we're seeing consultancies be more formed for companies. They're noticing trends and getting the company to adjust and capitalize on clients' demands. The digital accelerators are gaining traction, and GDIT, they're ramping up investments in them as they become a more prominent part of their go-to-market strategy. And we're going to see their large-scale programs start to reach scale, which has helped its operating margin. I think it's probably worth mentioning here that GDIT has made a lot of progress in federal health. Going back to like 4Q23, they secured 2 contracts with CMS and HHS collectively valued at like just under $3 billion. Like the big one was HHS awarded GDIT a $2.5 billion contract to transition the Indian Health Service to Oracle Health's cloud-based enterprise electronic health record system. But despite winning these contracts and the Biden administration continuing to healthily fund civilian investments, GDT's revenue from non-DoD clients, it just hasn't been dramatically improving. It's actually fell fairly dramatically in 4Q23 and slightly in the quarter on display on the bubble graph right now. GDT has just struggled with these comparisons since it losing momentum after an impressive performance in the second half of 2022. And, part of this is like their old struggles returning with converting bookings to revenue. Now, they've been making great progress in federal health, but of course, the DoD is still their bread and butter. Most of the reported contracts still tied to them, and we're seeing them continue to deepen their relationship with agencies. Do we have any questions in the audience about any particular vendors?
There was a question about the telecom sector, and it's not an area that we track. We focus exclusively on enterprise IT technologies and services. So that's a little outside of our purview. However, what we have observed, we've observed a lot of activity on behalf of our vendors, the vendors illustrated here in the 5G area. General Dynamics, for example, they launched a 5G accelerator coalition, if you will. James, correct me if I'm wrong on the actual name, but who's Alan Hamilton is leading a DoD R&D initiative in the DoD. A lot of D's there. And I know to a lesser degree, CACI is doing some work around that area. But it is where it overlaps enterprise IT, and especially on the defense side, where it is going to be one of the enabling technologies that drives digital technology out to, as they say, out to the tactical edge. There is relevance for our companies, but from a telecoms perspective, and that's also the case in the intelligence community, we're not seeing quite as much 5G related activity in the civil market. It's really been concentrated, at least from our perspective, on the defense side. So I hope that helps to clarify the question on telecom. I did want to also make a point, and I was reminded of this when James mentioned earlier that growth at Maximus was 100% organic, as it was essentially for Accenture Federal Services, Booz Allen, CACI, and Leidos in this quarter. We have seen some of these vendors, I mentioned Accenture before, but Booz Allen and CACI, who I mentioned also, they've made acquisitions as well. So this was really the last quarter where we saw, and it's really impressive in my view to see, a company posting double-digit, purely organic growth once again. Another illustration of just how strong the market is. So we're at the bottom of the hour. I think at this point, Patrick, if there are any other questions that have come through, or if there are any that will be forthcoming, we can address them now.
Yeah, John, let me weigh in real quick on the comms part, the connectivity part around 5G and wireless and all that. Just to say that in our most recent Voice of the Partner research, where we looked at companies in the IT services space, the cloud and the hyperscalers, the cloud and software space, and then in the hardware space, the real infrastructure space. One thing that popped up again and again in our research, and again we did both surveys and in-depth interviews to get an understanding of what those different kinds of companies were looking for from each other. Curiously, in every case, generative AI was down the list in terms of where near-term growth was going to come from. But at the top of everybody's list was connectivity and 5G and edge. So that admittedly was focused on the commercial sector, not on the Fed space, but it showed us that the leading companies in both IT services and consulting and in cloud and software and in the hardware sector are all looking at connectivity as where near-term growth is going to come from. And of course, it's really good for companies like Ericsson and Nokia and others that are in that space. But it also shows that that's what's driving demand, because they're only saying that because they're hearing that demand from their own clients. So there's a lot of concern that the next wave of generative AI, of automation, of AI generally, of analytics, all that's going to depend heavily on connectivity, which makes sense. I mean, data is useless if you can't connect it to anything. So I think we will see a surge in that. John and James, one thing I want to wrap up with before we finish here, and then that's just your outlook on the 2025 budget. What I know it's too early to predict the election, certainly, but it isn't too early for your predictions on what you think is going to happen as we roll into the next fiscal year. So, John, if you want to maybe go first, and then James, and then I'll wrap us up.
Sure. I'm glad you mentioned the election because, and I'm not going to make any predictions with respect to that. However, industry observers and certainly the vendors themselves remember 4 years ago the post-election turmoil that it really exacerbated the impact. We were also just coming off of the pandemic 4 years ago, and then the post-election turbulence that we saw that ran well into the second quarter of the federal fiscal year and federal fiscal 2021. That's still fresh in our minds, still fresh in the minds of the vendors that we track, and there is concern, there is anxiety that we may revisit that, and that may be one of the underlying reasons why behind the expectations that growth across the board, and I know James has done some research by agency and on the civil side, but growth across the board is expected to slow. That said, two vendors that we track, CACI and Booz Allen, and Booz Allen in particular, Booz Allen is still expecting double-digit growth, at least high single-digit growth in their fiscal 25, which ends March 31st. That coincides with the first half of federal fiscal 25. So I think it's not only an illustration of how strong the underlying market is, but how well Booz Allen is positioned. But they expect robust growth will continue for them into their next fiscal year. CACI's fiscal year ends June 30th. They're expecting more modest growth, but still in the mid to upper single digit range, I believe. Leidos is expecting their fiscal year coincides with the calendar year, and they're expecting not just continued mid to upper single digit growth, on a revenue base that is going to surpass $15 billion for them this year, but they're expecting profitability to increase. So the bull market will continue, but I believe that it is going to slowly pull back. With a couple of exceptions, I think health IT spending is going to remain robust. The election may or may not have an impact. It does seem, although we've looked back at our data, in the 15 or so years that we've been tracking the federal market, we've looked back at the historical data, and we haven't seen any clear patterns emerge with respect to the election years. Certainly 2020 was an aberration. 2024 could be as well. The expectation is that the federal fiscal 25 will begin in all likelihood with a continuing resolution. But the budget deal that was struck last year really introduced a significant amount of stability into the market, which has carried through until this year, and which may carry through at least the election the turmoil notwithstanding, may carry into federal fiscal 25. So, James, did you have any additional comments?
Well, I think it's an interesting point that there is the instability heading into the election, and I know a lot of our clients have asked, like, do we see spending go down, all that. I would say we've been seeing companies like CGI securing these large bridge contracts that carry them over into the next administration. So lessons from 2020, like agencies making sure they secure funding on that end. And then to a broader level, I mean, federal civilian, they had around $74.5 billion to spend this federal fiscal year. And that's the largest budget they've ever had. And like you said, John, the bull market keeps going. So next year, going to be even larger. It's just going to be the smallest increase. And we're going to see some agencies likely take a small budget cut. I think HHS, they're expected to decline by about $100 million. And yet, it's federal health. We're still seeing competition increase there. We're seeing more people throw their hat in the arena. And while we're seeing budgets, they're growing more slowly or even contracting, we're still going to see this demand for ways to improve the customer experience and to leverage AI. With AI, everyone's interested in it, everyone's spending on it, but to really leverage it, you need a robust modern infrastructure to really reap those benefits. You need to be investing in 5G. And, I know you love saying this to clients, they can't put AI on COBOL. Far too many federal IT infrastructures, they're just running on outdated mainframe systems, archaic software using old programming language. Agencies, they're going to continue to undergo their digital modernization journeys, harness AI, leverage zero trust, use hybrid multi-cloud environments. We're starting to see more vendors like Paradigm. They're operating more as a cloud services broker to help agencies customize their own cloud platforms with third-party services to capitalize on the demand for these services on the cloud. And I know it's only a fraction of the DoD's budget, but CGIT too, combined joint all-domain command and control, that push to allow all branches of the military to relay data instantaneously. It's a good example of all this demand for all these new and fancy technologies, but you need to modernize your systems before you can really start leveraging those newer capabilities to the extent that they want to. Like CGIT2 is this cool idea where all the branches can communicate seamlessly, leverage each other's data, and even utilize AI in some really unique ways, like selecting the weapon to use in combat based on data. But there's still such a lot of work to go before we see that all play out. And while it'll definitely take time for agencies to fulfill their visions, we're going to see civilian and defense spending just continue to center around these core digital transformation, modernization areas for many years ahead. And I think the bull market, may slow, but it'll keep going.
Yeah, I agree. I'll also say that, after a 4-year windfall for the vendors that we track, I believe that, and a 4-year windfall for the IT leadership at the agencies across the federal space. Now, IT decision makers are under pressure to, show us what you've done, show us what you're going to do, with the budget expansions that you've enjoyed over the last couple of years. we're now putting the pressure on you to demonstrate to us how you have, how effectively have you invested the dollars that we've allocated, that we've earmarked over the last few years. And that pressure now is coming to bear on the vendors that we follow at TBR. And I think one of the ways that that's manifesting is that we're seeing, as James mentioned earlier, we're seeing vendors that are standing up more advisory focused practices, that are going to be able to more directly for the leadership at agencies, connect mission. In the commercial side, we would say, tech enabling strategy. But in the federal side, you replace the word strategy with mission. How do we IT enable? How do we digitally enable an agency's mission? And it's really been that capability, that consulting, that advisory-led capability that we're seeing, vendors jumping into the market, like James mentioned General Dynamics. I'll mention SAIC just stood up a new consulting advisory practice on the civil market. Now they're under pressure. Make the business case. Show us. Don't tell us anymore. How is this going to happen? What does the roadmap look like? Where is the ROI going to come from? How are we going to address concerns around resource management and operational, reinventing our operations, if you will. So